let's move on to our first panel discussion of the day. That's the InsurTech Ecosystem Forum. So let's introduce the guests. We have Joel Agard, Group Head of Innovation at Zurich Insurance Group. Also joining us, we have Stefano, Bison, Group Head of Business Development, Partnerships and Innovation at Arazi Generali. And we also have Arazi, Founder and General Partner at FinTLV Venture Capital. So, thank you very much indeed for joining us, all of you. How are you all?
Very well, thank you.
Me too, all good, thank you.
You know, in Israel it's a bit of a hard times, but we are going to be well soon, hopefully.
Hopefully, and obviously we do send all of our very best wishes to the incredibly difficult situation there at the moment, of course. Well, moving on to the issue at hand for us here today, here at InsurTech Live, we are looking at the ecosystem. Plenty for us to get through over the next half an hour or so. But I guess when it comes to ecosystems, the foundation of that is all about partnerships. So I'll put this to all of you first of all. In this kind of environment, what for you makes a great partnership? And I'll start with you, Joel.
Yeah, well, we at Zurich, we do not follow a classic corporate venture capital approach. This is why we mainly search for startups that help us solve business problems. So finding strategic collaborations with startups is what we're searching for. We're doing this for a couple of years now. We started with by partnering with this very famous startup accelerators everybody knows. A couple of years ago, we then started to run our own innovation program, building our very own innovation ecosystem with the launch of the Innovation Championship. At the beginning, it was a championship. It was back in 2018, I think, when there was the football soccer World Cup happening. We thought, hey, let's replicate that, and started this program, which has now become one of the largest startup programs in our industry, I believe.
Stefano, for you, the key to a great partnership?
I'll be telegraphic. Alignment of incentives, which is theoretically easy and oftentimes super difficult to achieve. We are looking for things that are, as an incumbent, I'm talking about, are not always the same that the startup is interested in, and finding the right alignment and the right balances and checks and balances throughout the process, through governance and say the right control systems, I think is fundamental. It's not impossible, but the earlier the stage of the startup, the more difficult.
And Gil, we'll come to you last on this one, please.
So, for me, collaboration, I think, is the significant part is the power of our ecosystem. And I think that the insurance industry has a unique ecosystem, a global ecosystem, which concludes all the partners that are on the value chain of the insurance industry, from the reinsurance companies through the international insurance companies like Zurich and Generali, through all the way to carriers, MGAs, brokers, of course, captives, etc. And what we are trying to achieve is to have a wider discussion with all of the partners in this industry in order to utilize the power of the ecosystem for successful initiatives, successful investments, and of course, successful business models. I think this is the majority of our job.
So we've looked at what makes a great partnership. Let's flip it. Let's look at what are the key things, the key red flags that can make a difficult partnership, or one that doesn't work so well within that ecosystem. For you, what are the main things you'd look out for when a partnership has maybe been established and isn't working as well as it could do? Stefano, I'll come to you first on that one, please.
You know, it's the sort of the opposite of what I was saying before. So what we try to achieve is aligning interests, aligning objectives from day zero. So our way of doing it is we go sort of need-based. So we know what our needs are, and we try to find solutions for that specific issues. Sometimes it's more opportunity driven. I mean, I'm not saying we refuse to look at moonshots, but the problem in general, if I can make a caveat, is not finding right partners. There's way too many there, but it's finding those right ones that really have a probability of going through in our innovation channel and funnel internally. As such, what we do is selecting the startup or the partner, not necessarily a startup in a way that is fitting with our needs. It has a great founding team. If it's a startup, that's one of the fundamental criteria. And it has enough runway in terms of funding to give us a bit of comfort in building something together, which is, once again, need specific. But there's another aspect which is fundamental, that is culture. And again, finding alignment not only of interest, but cultures, I would add to what I said before, is fundamental, because if, you're not really understanding who's sitting on the other side of the table, you can put in place anything and any governance system, but it's not gonna work. And as innovation team, and I think this also work for Joel, we oftentimes act as cultural mediators or cushions between the very traditional, for example, actuary department and the very innovative data scientists and startuppers with digital backgrounds that are in the market. But at some point we need to phase out, and they need to make it work alone. So if there's this level of sensitivity, if they have the right cultural setup, it's much easier to work. Then, as I said, there's governance elements that we can put in. As an example, oftentimes, not too often, but oftentimes we do direct investments in the startup, so that we have, a board seat or a board observer, at least something that helps us somehow shaping the direction of their strategic development without screwing it up. I'm sorry for the French, because sometimes when you push them too much in your direction, then you might be jeopardizing or at least compromising the rest of the go-to-market, so overall the value of the startup.
Don't worry, Stefano. Screwing it up is an incredibly technical term, and we're not afraid to be technical here on InsurTech Live. Gil, if we can come to you next for the main things that you'd be on the lookout for a partnership that isn't working or isn't a good fit.
Okay. I will just make the differentiation between early stage companies and later stage companies. But in both cases, you need to have a very strong team, AAA team, that is leading the company. This is mostly important in the early stages, because at the early stages, sometimes the business models doesn't, you don't know what will be the business model, but you just need to make sure that the founders and the team that is building the company knows what they're doing, and they know how to achieve changes and be agile enough to make the changes through their ways. But as long as you go through the maturity stages of these companies, you certainly need to have a business model. And without a firm business model that knows to make money out of the insurance or the product or the business model, the business line, if you don't have a firm business model, then it's going to be a disaster later on. And one last thing, I think that if you were asking me or other VCs this question in 2021 or 2020, we would probably tell you that we are looking for companies that are on the value chain of the insurance industry, capital-intense companies, capital with taking risk on their balance sheet, with a big balance sheet. And I think nowadays more and more VCs and investors are now looking into more and more companies that are like SaaS providers, technology enablers, and companies that have lower or none risk on their balance sheet, low capital intensity, and high gross margins, which is completely different, like 180 degrees of what we have seen like 2 years ago.
Yes, there's been a lot of change in a short period of time. Joel, I'll come to you last on this one. We've covered an awful lot of things to be looking out for, but anything you'd add about when maybe a partnership isn't a good fit and how you'd identify that?
I think I would like to underpin a lot of what Stefano said. I mean, it is key to have be aligned in terms of the strategy. If there's no alignment in terms of a joint strategic purpose, I think that's a no-go. For us, but I guess this goes for many other incumbents as well. There needs to, and to Gil's point, right? The business potential needs to be there. Very often, startups, especially the earlier stage startups, they do have a sound business model within their industry or their niche, where we come in, we complement the solution of the startup with our capabilities and build a case together. And I think not all startups do share this mindset, right? Very often, the startup already has a successful product that they launch in the market, but maybe not in our industry. So, trying to find this rare breed of not the big unicorns that want to conquer the world and want to actually compete with us in commons, but find these more herd animals, as we call them zebra type of startups that want to collaborate, that share a joint vision, that want to partner with us and build something together with us, and want to solve customer problems of Zurich. That's what we're searching for. Right, that's definitely something that is a red flag. If in the early discussions we realize that they actually just want to sell us their solution, for this we have a procurement team that can handle that, right? But also it needs to have a novelty factor, and I'm also, again, what Stefano said, we're not searching for the next moonshots, but solutions that can complement our current value chain or support us in one part of the value chain, as opposed to the InsurTechs that want to cover the entire value chain. So I think these are the main points I think I would like to underpin.
Well, I have three people here on the call of an extraordinary amount of experience between all of you. So what I would love to do now is look for some great examples you have all seen of how companies have leveraged InsurTech ecosystems to really push innovation, drive change, and enhance things for customers. What are the best examples you've all seen of that? And we'll start with you, Gil, on this one, please.
Okay, so I might choose one of our portfolio companies as an example, and I would choose Next Insurance. Because I think Next Insurance is the perfect example of a company that was established by a very, I think, experienced team that has already done a few companies before an exit. And they chose a very difficult business line in the insurance industry, which is the SMEs business line for the US market. And it's a very complicated business line because of 50 states, different regulations, very diversified in terms of types of businesses and also in types of the coverages. So you need to maintain a very large amount of data layers for all of these together. And they have achieved a very significant progress in their work by building a very unique platform that enables them to be the only one in the market to sell embedded insurance for SMEs, for a multi-line of business in one single policy and together. And currently, I think they're the biggest embedded insurance platform in the US for workers' compensation in terms of SMEs. And I think that the results, I think one of the major challenges of these early and young companies are the underwriting results. And when you see the results of companies like Next and the results of their underwriting profitability, you understand that there has been a very successful journey for them in order to achieve these very good results in terms of profitability. And of course, in terms of profitable underwriting and profitability of the company. So this would be, for me, the best example how to collaborate in the ecosystem, how to build a very strong distribution channels that are both brokers, direct and embedded, and how to build a very strong panel of reinsurance companies how to build a strong underlying underwriting processes and the claims processes. For me, it's a big win.
Yeah, that's a fantastic example. Joel, if we can come to you next, any examples you'd want to surface of a really good example of using these InsurTech ecosystems to drive innovation and help customers?
Yeah, let me be a bit provocative here, maybe. Let's start with the word InsurTech to start with, right? I believe that the majority of partnerships we embark on with startups aren't typical InsurTechs. Right. Very often, I think the term InsurTech is broader than 5 years ago. Right. When we talk about startup ecosystems today, we also include mobility tech, climate tech, health techs, prop techs, and classic AI, generative AI companies, satellite startups. All of these startups feed more and more into the InsurTech space as well, because very often they come with solutions that we can use to complement our current business model, and that's one of the challenges. And I could talk for hours about these topics and examples, but rather than examples, I would like to highlight that there's much more in the startup ecosystem beyond even our classic InsurTech industry that we originally embarked on. So like 5 years ago, when we started with our programs, working with the climate tech, working with the cyber security startup wasn't really top of our priorities. But this has changed, right? In recent times, I would say 60 to 70% of the startups aren't in the typical InsurTech space, if you will, but are more broader startup ecosystems that we tap into. Not sure if that, I guess that's the same for Stefano as well.
Pretty much. If I can build on this actually, and I'll build on this by giving a slightly different angle. So yes, among all our direct competitors, I think we are pretty similar on this to Zurich. There's many differences as well, but on this thing, I think we completely share the view and the approach. And what I typically say is that our innovation approach, and sorry for starting with a caveat, is very result-oriented and pragmatic. As such, and this is the different angle that I'm trying to bring to the question, not all ecosystems are the same. So focusing for a second not on the object that comes out from the ecosystem, so the specific partnership we might not be developing with one or another startup, and as Joel said, we could bring you like 15 of those that are very interesting, and if you want, we'll elaborate later on one or more. But talking about the ecosystem per se, I think, as I said, many ecosystems are not necessarily in line with our needs. And as Gil was saying before, VC pivoted from one view to another in the course of 2 years, and also because of the situation with inflation and the interest rates. But if you look at the innovation ecosystem arena, you will see a pivot there as well. Few years ago, up to, I would say 3 to 4, there were a lot of incubators and accelerators. So the ecosystem was working for the startup. Progressively, we moved from enhancing and developing startups, which were the bulk of the movement, of the startup ecosystem, also in InsurTech. We moved to different models. And in our case, and I'm not saying, it's right or wrong, but in our case, that was more innovation theater. It was more show. It was more cultural change push than a real result. So not really fitting with our pragmatic innovation approach. Now what we did is pivoting towards a VC-led origination. So we are leveraging and relying on FinTLV and other funds we have invested in because, we get first-hand experience, and they do understand the business, and they do know very well the entrepreneurs, and they can do it much more properly than what we could do ourselves in a few calls. So once again, it's need-focused, it's very specific introduction, it's pre-vetted, and then we have our vetting process with our criteria. Another thing we did, and I think it's interesting to share, is to create our own small ecosystems. And as Joel was saying, InsurTech is not, per se, strictly intended, is not everything. We are doing a lot on the boundaries or on the adjacent fields. For example, in France, we have launched a very nice initiative. It's called Future for Care. We have launched with Capgemini, Orange, and Sanofi. So other partners, we're not alone, but it's fully dedicated. It's a sort of an accelerator. We call it CorpUp. It's the place, is the crisis between corporate and startup, but it's a physical and virtual place where corporates, our 4 founders, plus others that could be invited time by time, and startup meet to solve specific needs. In this case, it's fully dedicated, and in fact, that's the main area. It's fully dedicated to healthcare, wellness, and let's say human sciences related topics. It's called the Future for Care. It's in the center of Paris. But you see, and I close with this, I don't want to waste too much time, rather than relying on call for innovations, acceleration programs, etc. We said, why don't we set up our own thing? So we do exactly what we need in there. No? And I think now there's enough volume, and we are big enough probably to afford it, rather than going a bit around here and around there.
No,
can I add something to what Joel and Stefano said?
Of course.
I think we are very lucky. We are very lucky because the insurance industry is so wide, it's huge, and it touches every aspect of our lives, including every technology, every new technology, anything. So to give an example of the width of this ecosystem, let's take an example of quantum computing. Does quantum computing is any relationship with the InsurTech? No. But if you try to understand what are going to be the effects of quantum computing on longevity, on drugs that are personalized, on cancer, on other things that would prevent people from becoming ill, to have higher longevity, longer life expectancy, which is healthy life expectancy, etc., you would understand that quantum computing is going to significantly impact the insurance industry and all the pension funds and annuities and all the health insurance, etc., etc., etc. And when you think about it, you think about the next things that you want to implement within your company to get ready for this era. So this is only a small example of how any type of new technology, any type of anything that is in relationship with our health, our lives, our preventative measures can be connected and is connected to the insurance industry.
Yes, it touches so many different parts of so many different businesses, exactly. What I did want to move on to, though, is potential friction between InsurTechs and the more heritage names. It's definitely been a thread that has come up through the event so far. For all of you, what advice would you have for startups, for anyone across the InsurTech ecosystem when they're wanting to work with the established names to make sure they can actually collaborate and not cause problems or not upset the people they're trying to work with? What advice would you all have? And we'll start with you, Joel, please.
I think it's very easy. Jill or Joel? Sorry, Joel?
You go first, Jill.
It's very easy. I think if you asked me this 5 years ago, I would say it's hard and recruitment, etc., 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 and the companies doesn't know how to speak the startup language and vice versa. But nowadays, the companies like Generali, like Zurich, like I think most of the big groups and carriers and reinsurance, they are already know how to work with startups. They know exactly what is their appetite in terms of maturity of companies, how to work with these companies, how to cooperate with them. And I don't think that there's any startup that doesn't know how to reach them. So I think all these burdens has been reduced to minimal levels. That's my overview.
Joel?
Yeah, I agree. I think if I had a couple of pieces of advice for startups when starting first discussions with an incumbent, I think it boils down to three things. Make sure you have someone dedicated that is running the project, that is the face of your initiative between the startup and the initiative, and align on the long-term goal. So don't try to just sell or start pilots. Make sure it is clear, and that's the second piece of advice, together with this stakeholder, what it takes for the initiative to not move from 0 to 1, meaning the pilot, but what it would need in terms of KPIs or milestones to be reached to get from 1 to 100, so to say. So align on the objectives, and very often this is not a business case, right? And Stefano, you somewhat talked about it earlier. Make sure that you have a common understanding what the project lead, but also the sponsor wants, which is the third point, right? Make sure that it's not just a small pilot pet project. Make sure it is embarked in a strategic initiative, and make sure to understand what also the overall sponsors think. So, in short, have a dedicated person, a champion with it to drive this initiative, especially in a global organization like ours, or like Generali. Make sure you have the right person that can drive this from A to Z. Make sure to have the sponsor to then really accelerate it and scale it and align on the KPIs. I think. Besides all the other soft factors, with make sure that the partner has a startup mindset, has a digital and agile team that can support it, etc. I think these are the main criteria if I would have to select just the three of them.
Yeah, I'll try to build on this. So not replying those, but let's say additionally, because I agree with all that's been said. You said what are the frictions? So I'll try to say what not to do to the startuppers or to the partners coming to pitch. First, don't come pitching like if you were pitching to a VC, because as I said, we're trying to solve issues, we're not investing. So I'm relatively interested in the solution today to understand what are your capabilities of solving my specific issue. To your solution, sorry, I meant today to solve my solution. So I want somebody that did sort of his homework, possibly, and comes, point number 2, with a relative flexibility in discussing it. I think Joel said it before. I mean, don't try to push what you have there. You should act more as a consultant than a salesman. It's difficult because typically people getting in contact with us are salespeople and not consultants in terms of profiles. That's what B2B companies do. And you know, if I don't perceive flexibility in adapting the product or the solution under the right circumstances, of course, and being paid, I'm not asking, you know, to pivot the company for free for a pilot, but I mean, provided that we are all having some common sense, I think it's fundamental to be flexible, because if I don't perceive flexibility, I'd rather go and buy the solution of somebody else, and not necessarily, you know, having to take the risk of collaborating with a startup. And the third, keep in mind that not because we are sitting and we're doing what I call the luxury employees of a large incumbent, and not because of this we are not innovative or we are stupid. We do understand what's happening. We have different incentive systems. We have very busy agendas. So please consider that, you know, on the other side of the table, there's a lot going on, and there's a lot to be fixed before being able to take something and apply it anywhere. So if it takes time, you know, to get back to you, if it takes time to build something that makes sense because there's, you know, legal, regulatory, fiscal issues, etc., please appreciate it, because it's also in the best interest of the partnership and not because we're just wasting time. No, sometimes I see Because on the other side of the table, they're really running, and I understand, they're running out of cash and they're building, traction for the next round or whatever. But we have built what Gil was saying. We have built the right understanding and the culture to be able to understand the other side of the table. I'm not sure this has always happened from the other side of the table. So it takes time. Lead times and lead cycles for sale B2B to insurance are extremely long. I think Gil can confirm it's 6 to 9 months from the first inception to a real project. It's normal. We're not going to solve it today with a click.
Yeah, and maybe I'll add to this, Stefano, that the pitch to the insurance company should be adapted to the role and responsibility of the people that are listening to this pitch. So, for example, if this is a pitch for a claims management solution, you should have a pitch that would find an open ear on the claims department, and they should understand immediately what would be the benefits for them from the solution, and not what would be the benefits as a general company or as an investment. So the pitch should be very adapted to the level and role of the people you're speaking with.
Well, we do have questions coming in from our audience, as ever. They're always very, very active. So I'll go to a couple of questions from them before I go back to some of the other things I wanted to discuss. First question is, and this is a huge question, what do we all feel the next Google of insurance could look like? What do we all feel is going to be the next big, the next groundbreaking idea in this space? And I open that all to all of you.
I'll pass this to Gil because he's seen more than us,
I think it's a very hard question because you give the fools the ability to predict something. But I think that in general we are looking at global trends just for this sake of understanding what would be the next big trend, and maybe we can focus there. One of the largest trends that we are looking at now is the one I just said before, it's longevity. Because if I will come over and tell everybody here on this stage that in 20 years from now, maybe the life expectancy of all the people would be extended by 20 years, which would dramatically change all the mortality tables of all the people on this planet, this can imply on a huge and dramatic shift on almost everything that is long tail, from health insurance, through your savings, through your wealth management, through your life insurance, your annuities, your pension fund, everything would be significantly changed. And if you're not ready and prepared for this moment, then you are out of the game completely. And this might be a very big Google moment for our industry in terms of the size and impact on our industry.
If I maybe can add to that, Gil, and I think you're already in the same direction, talking about sustainability overall, right? You're mainly touching on the social sustainability, so the S in the ESG, I think, and it's not new, right? But if I look at our problems as an industry, the E, the climate part, energy transition risk, these kind of topics, I think nobody really has found the holy grail yet, and it will take a couple of years and a lot of investment and exploration in terms of finding these solutions that can help us not only as an industry but as humankind to solve these problems. So I think the next Google element will be in the ESG space, being it in the S space, as you just pointed out, Gil, or in the E space, where I do see some bumpy times ahead for all of us, and which has implications for insurance, of course, as well.
100%. Yeah.
And if I can put an umbrella on what you both said, but that's why I wanted Gil to start, because he's more optimist than me typically. The umbrella, and then a precision. The umbrella is, I agree with both of what you said, and I think if there's a googly moment to come, it will be around the personalization of the solution. It's tailored solution for, agriculture. Joel talked about the E element of ESG. It's about, precise and personalized solutions for long-term care, or that kind of solutions that we might need in the light of longevity. But not only, I mean, even in the P&C space, I see IoT growing in US and Europe. Mobility is the more typical application, and there's already behavioral pricing, in our portfolios, and that's something we could do also on home. We could do it on small businesses, etc. So, being able to move in a more personalized setup rather than the standard tarification, I think is the solution. The world is changing; it's changing always quicker, so it's really necessary. But we need to evolve the legacy systems, because today the core insurance is built in a completely different way. Right. And we all know how difficult it is to adjust, the tariff, adjust the product characteristics, the coverages, the guarantees, etc. So it's a long process, and that's why I wanted to close with a more sad and comment. It's not going to be soon, I think. I mean, the insurance industry has demonstrated a very high level of resiliency, but at the same time, a very high level of stickiness. And our customers too. And when I came in the insurance industry around 10 years ago from financial services, from banking mostly, I thought this would have already happened by today. And frankly speaking, little changed. There was almost no disruption. Direct is more or less capped where it was 5 or 6 years ago. Our customers, they still want to talk to a physical intermediary, oftentimes. And oftentimes, like for almost everything but the small policies or MTPL. So it's happening, but it's not happening tomorrow. So there's no disruption. There's no Google coming in and sending us, upside down. I think we need to evolve, and insurance startups are natively B2B more than B2C in most cases. So that's going to happen, but relentlessly and slowly we are getting there, but I would underline the slowly.
Where I'll finish this discussion is, Stefano, what you referenced there on a couple of occasions, and that's the most important person in any room in this discussion, and that is the customer. How important, but also how difficult can it be to make sure that the needs and the value to the customer are always front and centre of any decision and any innovation in this space?
If you want, I start and I'll try to be really quick. So it's fundamental. All our strategy is built around customers, and we have a mission. No? It's being lifetime partners to our customers. We just don't want to pay the claims. We want to help them to live longer, healthier, happier lives. Be there, private customers or entrepreneurs or small businesses or large corporates, whatever. This means a lot of things, but I think this should be always the North Star of anything we do. It's not easy, because oftentimes customers don't know what they want, or they don't know what they need, or even worse, sometimes they think they want something which is against their own interest. So our game is a long-term game, and we need to make sure that they are covered even when they believe it's not necessary. So it's our responsibility, and here there's an element of sustainability. I agree with Joel, to create awareness, explain to them that having some kind of coverages is not just about making my yearly target, but really in their own interest, and then creating products that are affordable, because the point is, with this rate of inflation, and I'm talking specifically for Europe, people is getting poorer, and we need to acknowledge that. So there's some things that they will need to cut, unfortunately, and it's tomorrow things. And insurance is a tomorrow thing, because you're paying today for being covered tomorrow. So either we come up with something that also in terms of pricing becomes sustainable and more creative, or it's going to be difficult to convince them, no? But we need to have them at heart, and I think that being sustainable ultimately means this. I mean, it means having all our stakeholders, which is our customers and our employees as well, and our distributors, because our agents, oftentimes are independent, at heart, and understanding what the problems are, and developing stuff around those issues once again.
Yeah. Can I add something?
Absolutely.
Because I really liked the umbrella that you were using before, Stefano. So I'd like to put one more word into this discussion, and the word is impact. And I think this is a fantastic place to put the word impact. And I think that a fantastic job has been done by all the insurance companies in the world, because at the beginning of the insurance industry, like Lloyd's, etc., these insurance companies were brought to life to provide security from catastrophes. And nowadays, I think most of the insurance companies, their major goals is to prevent catastrophes. And instead of taking care of catastrophes, they're aiming to prevent these catastrophes. And I think this is a huge impact on the humanity here in general. And I think this is a huge umbrella above every head of everyone that is listening to this discussion. And this is a huge, I think, fantastic way of saying thank you to these insurance companies that are doing a lot of preventative measures, both in P&C, life, health, anything, and just trying to save us from our catastrophes.
I agree, and I wanted to listen to you first, because at the end of the day, it's two things, right? On what Stefano said, also our strategy, not a surprise, is quite similar, because we have a customer-led strategy, which means we have this triangle. We have the customer at the top, and we have two additional core pillars, which is innovation and simplification, which both feed in to serve the customer. So everything we do, we start with the customer, we validate with the customer, then work backwards and see, is it feasible? Can we do it? Are we allowed to do it in some markets? And then also, is there a business that we can make out of it? At the end of the day, we're not an NGO. But what you said, and I think this is the bigger purpose, how can we get away from, and also that's not new, but I think we are now, as an industry, much better in getting away to just pay money if something bad has happened, but be there to actually prevent, protect customers, and prevent bad things from happening in the first place. It starts with commercial insurance, which is a very important part of our business, where we really try to make our customers more risk resilient in all types of risks, right? But also in the retail space, I think it is super important to get away from just being there after something bad has happened, but to be there to protect them, to predict bad things that might happen, and then protect our customers and work together with the commercial and retail customers to keep them safe.
And Joel, I think that's a fantastic place to wrap things up. We're finishing with the customer, as that seems to be the best place. Joel, Stefano, Gil, thanks all of you for joining us in InsurTech Live. And Gil, I'm sure I speak for all the audience that we hope there's a rapid resolution to things in Israel at the moment, and our best wishes to friends and colleagues there. But all of you, thank you so much for joining us at InsurTech Live. Thanks ever so much for your time.
Thank you so much. Bye-bye.
Bye-bye now. Thank you.